You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' bit of tunage means it is time to rock out once again with the option block. Like the man said, my name is Mark Longo, coming at you from the brand spanking new, theoptionsinsider.com, and beaming in from our Options Insider Radio Network studio. Hopefully you guys are enjoying. Maybe you can join us live. It looks like it's live. I'll have to go check and see. You never know with the with the Mixler how it's working or not, but it seems to be working. We shall see forthwith throughout the show. Also experiment with some other ideas to get you live streaming as well, listeners. Some of you have asked about Facebook and other things like that, Facebook Live, YouTube, but those all require a video component, and those are always, shall we say, a burden on a lot of our guests. So trying to keep it audio only for now, which is why we like Mixler, but, we're always experimenting with other ideas. Send us your ideas. Send us your questions. Send us your comments. You know how to hit us up on all of the various social medias at Options, or, of course, questions at theoptionsinsider.com. Let's see who we've got here on the old panel today, the old all-star panel, to help me answer your various queries. Let's start off. Let's go out to that most quiet and tranquil of hamlets, known as St. Charles, where we are joined by the king of the low BBI himself, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, I haven't asked you in a long time. How goes the BBI, sir?
BBI's been pretty good lately. Haven't had to bust any kidneys, thankfully. But with earnings coming up, that may change, but always ready. But in the meantime, until we get more in the midst of earnings season, happy to be here and broadcasting from outside today. So always excited to do that.
Outside? Are you on the boat cruising the beloved Fox River?
No, but I'm on the shores of the Fox River.
Well, there you go. Fox River adjacent, let's call it. Beaming in here. And yeah, these aren't exactly markets that are, shall we say, can't take a bit of a potty break every now and then. They're not that hot and heavy. We shall see if we can get some of that later on. Maybe you don't want that. Maybe you want a nice, relaxing summer. It's up to you as we keep on rolling. Let's head on out to the sleepy shores of Maine, where we are joined once again by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, I don't get to ask you very often either. How goes your BBI, sir?
Do I have a BBI?
Now you do, because I just coined it for you.
I guess so. It's a lot like TOSAWs right now. There's just not a lot. There's not a lot going on, and it's a little quiet. So I would say I guess that's the BBI is low. The index is low. Would that be the right way?
Yeah, actually, it should be high, right? Because the more you go, the high numerator will drive up the value of the index, correct? So,
I got you. So it is.
So a day like today, it could be like a 9 because there's nothing else going on. You got nothing to do but go to the bathroom. A day when the S&P is down 5% and everything's going crazy, hell hitting the high water and all that good stuff, dogs and cats living together, then you got a 0, maybe a fractional BBI, because you run off and run back really quick. That kind of thing. So that is the measure. That is the value of the BBI. I will not besmirch the father of the last son of Krypton by asking him such things. Instead, let's go on out to the hot seat, the Fidelity hot seat, where we are joined once again by Mr. Trey Jarrell. Trey, welcome back to the program, sir. How were things in the land of Krypton before it all went sour?
Going very well. I've never been more nervous for an intro here, listening to Uncle Mike and Andrew, but things are going well. Nice, unusual cold front, only about 90 degrees in Jacksonville versus our usual 100, so just enjoying the beautiful day. Yeah,
well, it wouldn't be the hot seat if I didn't make you sweat a little bit.
That's right.
Yeah, speaking of sweating, we are not doing that in Chicago. You're getting a little bit of a cold spell, down about 25 degrees. It was 100 plus, down almost 30 degrees from where it was just a couple of days ago. Now it's a mere balmy 75. We can do all that all day, because that means it's somewhat manageable in the studio as well, which is always nice for me as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. You know what that music means. It is time to talk some trading. What the heck is lighting up the markets on this fairly comparatively high BBI type day? Feel free. You got to go to the bathroom. Go for it. We won't hold it against you. But coming into showtime here, we're seeing most of the major indices feeling a bit of an upswell. I guess the Dow is kind of a bit of the laggard in that camp. It's up a comparatively small 0.01%. S&P up about 0.25%. And the NASDAQ feeling a little bit of the love to the upside, up about not quite 2/3, but pretty close of a percent. Gold taking a bit of a break, and oil actually up a little bit, but still in that mid-50s handle. We're talking WTI, of course, listeners, not Brent. We're Americans. We talk WTI, darn it. So yeah, WTI not exactly getting a huge lift despite all of the various goings on over there in the Middle East, and of course our old friend VIX cash come into showtime. It was exactly unched. It was 14.25. It was pretty much 14.25 on the last show as well. Now, a few minutes into the show, it has given up a little bit of that ghost. It's off down to about 13.90, so off about 1/3 of a handle or so from where it was last show. Still not exactly kicking into high gear, to the upside or the downside. Kind of just vacillating around here. VVIX kind of doing the same thing. Down slightly, down about 3 handles from our last show, down about 84.5. VVIX, of course, the volatility of volatility. And as we said many times, it's not quite there yet, but it's getting perilously close to that level, down into the 70s, where things start happening. Volatility starts roaring back to life. So not quite there yet, but it bears watching, because it has bounced on these levels before too. So something to pay attention to, all you volatility watchers out there, as you're counting your bathroom breaks. So let's go on to our old friend VXX, also staying in the vol realm for a second. Also getting a little bit of that erosion back, down about 1/3 of a point from our last show, at about a 23.15, still north of that 23 handle. I was talking to someone over the weekend who was talking about rolling down some VXX puts. These are the kind of parties I go to, listeners. People talk about rolling VXX puts. I don't know what type of dinner and block parties you guys go to. This is what I go to. C'est la vie. I guess we all roll in different circles. Let's keep on. Let's go back to the Rock Lobster. Rock Lobster, I can imagine you, when you go to like your various soirees there in the hoi polloi of Maine, you also discuss rolling VXX puts, do you not?
Oh yeah, that's the first thing on our topic on the list. Because I mean, after all, I'm the only reason that Maine actually has an option presence, I think.
You are pretty much it.
But what do we mostly talk about? Fish that we don't catch, or outboard motors not working, stuff like that. You are in much higher, more rarefied climbs than I.
It's inescapable for me.
Your social climbing is
people
much
know
more
what I do, and they just come up to me with these things. It's inescapable. I cannot avoid it. As much as I
can't
try,
avoid the VXX.
I can't the VXX. All types of these things. It is the cross that I bear, sir.
And I think this is one of the weeks where everybody's waiting for this Fed policy thing, and then you have Iran. Iran seems to be doing some funky saber rattling. It kind of reminds me of
by literally rattling sabers by actually climbing aboard and seizing ships. That's kind of little. That's more. That's not really rattling. That's like saber using, isn't it?
Yes, I think I think the British took one of the Iran ships. So there might be a little tit for tat going there.
Yes, a little back and forth.
They've been trying to decide on Brexit for 2 years now, 3 years now. So they're still working that out. I'm not the current British government, not very impressive. Anyway, I thought ours was bad, but then I look around, I go, I guess it could be worse. But as far as VIX goes, why are we in the fort? I guess we're just breaking into the 13 handle. Why are we here? Why isn't it 12? It would be 11 if the stupid Fed, interest rate thing. The second part is rates have dropped from 3% in January or in mid-December to 2%, almost just over 2%, on the 10-year. So that's a big. Anybody notice that? And it's still miles above everybody else. So I don't see how rates are going to go up, even if the Fed wants them to. I don't see it. Half the budget increase or the deficit right now is because we have to pay more money for debt, courtesy of the last God knows how many administrations that we're piling debt on. So you've got this strange thing where the market wants to see lower rates. The rest of the world already has lower rates, and at this point, as far as VIX as a trade goes, I don't see, unless there's some offbeat news item, like this Hong Kong protest gets worse or something like that. I would think that would push the Chinese more to wanting to, to get rid of have the sort of the trade argument get settled. So there are all these little currents for volatility because basically that's what it is. The VIX is essentially just one big earnings trade around the S&P 500. And you don't get earnings. What you get is headline news, and a lot of trading the VIX is just handicapping headline news, macro events and how that could push the economy up or down. So right now it's trading at a 14, but the market's not moving, or at the high 13s, but the market really isn't moving. And we're waiting for the Fed, and I think that's how it's going to trade till the end of the week. I would almost put my crystal ball prediction in that we'd be about 40 cents from where we are right now, either up or down. I could see that easily happening. So
interesting. So you're putting in
but at least as of right now, there's not a bid for vol.
An extra unsolicited crystal ball. I like it, sir. By the way, it sounds like your mic is rubbing against your shirt or something. So it might want to, or maybe your hirsute beard. So
how about that? Is that better?
That's a little better. Yeah, I think so. So just don't want listeners to get all sorts of static cling as a result of the static electricity you're sending their way. But I did have someone approach me this weekend as well and attempt to argue that, given all the macro currents that are going on and saber rattling in the Middle East and the trade war and everything, that VIX should be like a 27. And you hear this every now and then, they look at a global broad macro perspective and try to translate that into a VIX that they feel is suitable for those global currents. And, it's a shame. At the end of the day, you have to kind of disabuse them of that notion. Say, at the end of the day, it's always down to the most basic of math when it comes to VIX. If it's not moving 1-2% a day, the VIX ain't going to reflect it. And maybe I see that a bit in the futures, obviously, if something crazy is being priced in down the road a bit. But in general, it's basic math. And sometimes that comes as a very unpleasant surprise to people out there who demand that VIX show them more. It's like they want it to be a political intrigue thing and everything else, and it's just not that.
And I think there's a lot of, and there's people that, if you don't like the current president, you want the market to go down and vol to be really high. It's very hard for it's hard for people just to accept the fact that VIX is at a relatively like realized vol is 8%. So the fact that we're already trading a 14 is a premium. It's not the premium they want, but it's premium enough. So, until something actually materializes from all this, it's all a lot of maybe. It's a giant game of maybe.
A giant game. Easy for me to say. A giant game of maybe out there. Let's see what kind of games the Fidelity folks are playing, what they're slinging. If they have a high or low BBI, we shall find out. Mr. Trey, sir, what is lighting up the tape over there in Fidelity land today?
Yeah, they've been keeping busy here today, to say the least. Have a few names that haven't popped up in a while coming back in our top 10 today. So I want to start out, make a quick mention. I know Colin talked a little bit about Microsoft last week, one of the ones we were keeping an eye on here today. Actually pulling up number 2 today on our orders by Fidelity customers. So came in with a nice earnings beat on Thursday, came in at $1.37 versus $1.21. And, stock really had a big open on Friday morning, but then, really sold off here throughout the day. But today, looking like things are a little bit off to a more positive start for Microsoft, up $1.66 right now at 138.27. So looking at the chart, right, it's been a steady uptrend here. Nothing showing the uptrend breaking as of yet. So, certainly positive from a chart stand at this standpoint. Fidelity customers split on it today, right at 50-50 between buys and sells. So no big indication one way or the other from them. Option market pretty interesting today too. About 1.37 call to put ratio with call buyers leading the way, about 41,000 versus 33,000 sellers here. So I wanted to do a follow up on that one here. Obviously, know we were looking at it last week, but a couple other names that hadn't popped up in a while today. Number 3 on our list today was actually Micron Technology. So interesting news report here today from Goldman Sachs noting that the chip inventories are falling, and market seems to like that here right now. Micron at 47.03, up $1.51. Fidelity customers split dead 50-50 on this one here as well, not getting a strong indication or buys or sells here from the Fidelity customers today. Been a really interesting chart here on Micron here, though, right? So back on June 26th at earnings was trading around $32, up today at $47. So just in a couple of weeks, almost 50% increase in price. So big, quick move here on Micron. Really not to that point where it's at its highs from 2018. You had the stock as high as 64, so still a little ways to go to get to that point. And sitting at an interesting level here right now. May have been kind of a support resistance point we saw at this 47 level through. Held support a couple of times in summer of 2018. Failed to break through it at resistance in September of 2018, and sitting right at it here right now. Option paper on here, also heavy on the call side, dead even 2-to-1 ratio calls to puts right now. But call sellers actually leading the way at 53,000 versus 47,000 call buyers here today, with implied volatility still holding relatively low on it here at 40 and a half right now. 52-week close about 34, so still in that lower percentile here. So this is one that hadn't popped up, here with the top 5 Fidelity customers as well. So interesting seeing that one back here today. Another one popping in here today that we haven't talked about in a little while at 4th on the list of Beyond Meat. So big day for Beyond Meat. They're trading at $196.27 right now, up $19.44. So big news there was Blue Apron. I mentioned some news here that they're going to add Beyond Meat onto their menu. So both stocks up. Fidelity customers, certainly interested more on the Beyond side here. Didn't see a Blue Apron topping the list here, but Beyond did. Also dead even 50-50 between buys and sells from Fidelity customers here today. Also heavy on the calls here, looking at the option market on Beyond, 102,000 calls to 58,000 puts, so about 1.75 to 1. Again, call buyers leading the way here, about 28,000 call buyers to 22,000 here as well. So this is putting it very near the all-time highs on it, right? Back on June 18th, it hit that 201.88, so didn't quite get there, but it's closest it's been. Big up day here. Imagine a lot of short covering here on this one, but one we'll be paying attention to throughout the day. One last one I wanted to mention. This is one that I don't think I've ever seen in the top 10 here before. So we always got to come with one a little bit more interesting name that doesn't pop up too often. But coming in at number 8 was CrowdStrike Holdings. Here that was ticker CRWD. Trading today at $87.36, up $3.86 here on the day at all-time highs right now, which doesn't go back a long ways. This stock actually IPO'd in June at $34. It was a cloud-based security company here, and just had earnings last Thursday here, and a lot of enthusiasm here from the earnings. They reported much better than expected guidance for July quarter as well as for fiscal year ending 2020 here as well. So huge option volume on it today, coming in total volume at 13,000. So maybe not as big as some of the other names, but its 90-day average volume is only about 7,500. So a little bit more than usual. About 3,400 call buyers. They were leading the way to today. IV sitting right now about 58 at the very low end of its long existence of a month and a half here right now. Thought this was an interesting one. Hadn't heard too much about it with an IPO, this fresh, and kind of cracked that top 10 here at Fidelity here today. So definitely wanted to always bring something a little bit new here on the show that we see up there. But that's what we had on the radar here from the Fidelity customer standpoint today.
Thanks for that newness, sir. We like a little bit of new car smell, new car shine here on the old option block. You're right. We don't see those tickers too often. Let's see the tickers we are seeing right now. Let's see if the top 10 for the market lines up with Fidelity here. Let's go number 10 here. Good old Tesla. Can't have a top 10 without Tesla in there somewhere. $1.12 on the tape. As of just about right now, these are very recent numbers. Number 9, AMD, $1.24 on the tape. Number 8, Snap, good old Snap, $1.39 on the tape. Number 7, the aforementioned Beyond, 161,000 contracts on the tape. 64% of that coming on the call is actually not the most call-loving paper we're seeing on the tape here. We'll get to that in a little bit. Beyond, like you mentioned there, Trey, up about 20 handles or so right about right now. So that puts it up about nearly 11% just on the news. Blue Apron's using interesting. I think they're already having supply problems. Are they going to be able to fill Blue Apron orders as well? Either way, clearly the market liking what they're hearing out there. Number 6, good old AT&T, $1.78 on the tape. Number 5, Facebook, 194,000. Number 4, Microsoft, $1.96. Still can't break 200K. Got to go all the way up to number 3 to break 200K today. So again, somewhat quiet day out there. 223,000 over there for Micron, numero dos there. Apple, a rare day out of the number 1 spot. 237,000 contracts on the tape for them. And rounding out our top 10 there, number 1, Netflix, an even 250,000 contracts on the tape. Let's see what's taken the most biased. And actually, it's Facebook. 82% of the paper, nearly 200,000 contracts coming on the call side of the ledger, followed hot and heavy by Snap with 79% of their 139,000 contracts coming on the call side. Beyond comparatively paltry, 64%. So a little bit more even flow going on out there. Speaking of flow, not a lot going on in the indices. VIX 80,000 coming into showtime. About 400K is the ADV out there. SPY flirting with the million. ADV about 2.1 million. SPX flirting with 500,000. ADV about 1.2 million. The Q's hitting 210. The ADV about 575 out there. The Russell, though, aka at least IWM, doing some action out there. 345,000 contracts on the tape coming into showtime. I'm sure there's more now. 285 is the ADV out there. So something is afoot. The game is afoot out there in IWM. Let me just pull it up really quickly. I believe when we saw it earlier when the scan brought it up, it was mostly puts lighting up the day. Let's see if that's the case. Yes, of that volume, 69,000 coming on the call side of the ledger and 293,000 coming. Obviously, a little bit more has gone up since then on the put side. So pretty active put day for good old IWM. Mr. Uncle Mike, sir, what is lighting up your own tape out there in the land of St. Charles, sir?
Well, in addition to what was already mentioned, I would say silver at this point, with the threats of war, not war, but with craziness going on in the Middle East with President Trump and the Iranians not exactly getting along. Silver has definitely caught a bid over the course of the last week, and it's up over 1% on the day-to-day. So I think that is kind of a rush to the paranoid buy. Oh, no, everything is bad. Let's buy some silver. So that's one thing. Of course, Apple above the 206 mark again, so that's making a climb up again. Facebook's actually up 1.5% on the day, so there are some movers on the day-to-day. Just as a whole, we're not making a huge amount of progress with the marketplace one way or another. I mean, we are up 1/3% approximately in the S&P, but we don't have too much movement on the day, and I expect that to kind of be the same. I agree with Andrew in that we're playing wait and see right now in the marketplace. What's going to be interesting over the course of the next couple of weeks is the fact that we're not only in an earnings season, but we're also watching macro events. Oftentimes when we're in earnings season, we say on this show, well, it's going to be nice to not have to analyze macro stuff. We can just focus on stocks for a change. Well, not necessarily the case right now. We got a trade war with China, we got the Fed, and we got earnings all in one fall swoop. So it's going to be interesting to see where this market goes and how it gets there over the course of the next couple of weeks. The next couple of days, anybody's guess at this point. I'm not sure I'll see a ton of movement on it, but we will see, as always.
Where we're going next is no mystery. We're heading right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Let's get funky. Let's get weird. Let's get a little whimsical. Time to get into the Odd Block. Before we kick off the names that fired off our Eye of Sauron, one that maybe should be in here, Mr. Rock Lobster, is one I was just kind of just talking about. I was just doing a little digging while Uncle Mike was talking, because I was trying to see what the heck is lighting up the tape out here in the Russell 2000 that is pushing it way beyond its ADV on a relatively quiet day. It seems like coming at Showtime now, or right now about Showtime actually, we're seeing Russell 2000 at 15.5, so up about 2 points, so not exactly a huge day out there in the Russell 2000 from an underlying perspective, but the options are tearing it up. Looks like it's the 146-143 put spread expiring on August 23rd. And that is not, I don't believe, the standard. I believe that is a weekly. Yes, that is a weekly. And so that's 1 week beyond standard expiration, going up 85,000 and 22,000. So you got over 100,000, 107,000 of this put spread going up. So 214 total listeners in this one spread on both legs. Looks like going up for 33 and about 31 cents paper buy-in. So opening on both legs as well. Mr. Rock Lobster, let's start there. This one blow your skirt up at all? Looks like we got about a pretty substantially out of the money put spread going up a little bit more than a month away with size opening here, the downside here in the Russell. You know, Russell's been acting kind of weird lately. It has been kind of moving to the downside in the days the rest of the market is moving up. So maybe our friend here is onto something. What do you think?
Isn't the Russell, I think the Russell's down quite a bit, in the last
months?
Yes. Isn't it down 8 or 9% or something? It hasn't really recovered with the rest of the market. I was just looking, I just pulled that up. I thought that was actually kind of odd. It's sort of the small, I think it was in the Wall Street Journal, actually. It was the small stocks have been left behind. I wonder if somebody's buying those puts, they think there's more sadness on the, because small stock is, miners and oil exploration and, small banks and stuff like that. And really been kind of under, you would think some money would be finding the Russell at some point. And that tends to what happens, tech is just, it's almost at its all-time highs again, if it's not already. And we're only a few handles short in the S&P 500s, but the Russell's definitely off. So it does look like a bit of an opportunity, but at least to kind of see if it catches up. I'm curious, and I'm not sure, like the low interest rate environment, I don't know how that hurts small companies, but I find it odd, or just money is going to, big technology. Everybody jumped back into the Googles and the Facebooks and the Amazons when they got torched in December and January. So, but the Russell dollars have not come back into there.
No love for the Russell 2000. It has been interesting to see. Yeah, the conventional wisdom coming into the trade war at the start of it was that Russell 2000 would fare fairly well in a mostly macro international driven trade conflict, and yet it seems like the opposite has been the case, which is interesting and fascinating. Clearly, some size money being put to work on that downside. Opening, I thought it was a roll, but it's not a roll. It's opening on both legs. So, I might have to put that one in the to be watched category as well. What say you, Mr. Rock Lobsters? We keep on rolling into what our actual Eye of Sauron. Sometimes I love doing the on-the-fly stuff, too. It's kind of fun. Let's kick things off. This is the name we have not, I don't think we've ever talked about this one. I would certainly probably remember this one. This is GEO Group. Ticker symbol GEO, appropriately enough, GEO. This is a private prisons company. They're a correctional institutions company specializing in privatized corrections, detention, and mental health treatment. So there you go, private prisons company. Let's see what's been up to in this sector. Not a sector we get to delve into very often, a contentious one, to say the least. Here, let's see. A year ago, they were trading about $26, so nearly $10 north of where they are right now. They kind of languished in that area, kind of drifted down to about 23, 22, and then Christmas Eve hit, and then all bets were off down to about 19. Then they kind of rebounded again up to about 24, and they kind of sold off again. It's kind of been an ups and down time, a little bit of a roller coaster here. Sold off again in March down to about 18 and change, and then they rallied back up again down to up to about nearly 24 again. Seems like 24 has been the upper bound of late before selling off again where they are right now, 16.83, off another $0.50 today, or about 2.5%. So it's been an interesting kind of range-bound period here for at least the last 6 months or so here for GEO. I'm going to guess all this downside is going to light up some puts. That does appear to be the case. Our Eye of Sauron finding us here some GEO, 14 puts, going up 15,000 times for $1.25. This is right on the offer. They were $1.15 at $1.25. This was opening over there on the Philly. Worth noting, obviously Jan, so there's going to be some earnings, and the next earnings are July 30th here. So not quite specifically an earnings play, but they're going to be a few cycles baked in there. So here we go. Downside. By the way, this is headquartered in Boca Raton for all you fancy folks out there. Boca Raton, Florida. Yeah, this is an interesting one. Mr. Rock Lobster, looks like someone not feeling the love. They're feeling the concern here for some downside, paying $1.25. So you're talking like 7% or so for not even a $17 stock to hedge it at the 14 handle. So $1.25. So they're out at $12.75. This is it's a lot of downside to pack in here for about a $16 and change name. What say you, sir? A lot of concern from now till Jan.
Yeah, I think this is one where I wonder if this is like I think Elizabeth Warren, the Senate, she's running for president. She wanted to abolish all private prisons. And I think if you trace her, she's kind of running up in the polls a little bit or whatever. That might be people just getting out of this. Maybe the private prison business is not a good business to be in. But usually, you're buying a put like that. That's, the stock's already down, 50% or more? That's a pretty long, you need some real bad things to happen at this point. So it's what I would say, it's ambitious put to buy. Very ambitious.
Yeah, I think of the viceroy around the show right now, you probably say, why don't you just sell it at that point? If you're spending that much on puts, stock that is not quite $10, but fairly close, he might just say, maybe you should get the heck out of Dodge. You clearly got some concerns. Of course, obviously, there are reasons why you can't sell out there. Taxes, corporate restrictions, those sorts of things. But still, on the face of it, he probably would be. Not to put words in his mouth, but I'm going to do it anyway. I'm going to say he's going to say, you probably should sell that. Yeah, that's all the way out to $12.75. You got some concerns. And you're right, it is a very contentious segment of the market right now, depending on which side of the aisle you're looking at, how people tend to view that one. But if you can buy calls on being contentious. That would certainly be on the upside of that. But downside, it seems like, is the order of the day for the near term here. In Geo, let's move on to a less contentious name. Let's go out to Pulte Group. This is a construction company, ticker symbol PHM. Trading today, 33.65, up about, not quite half a buck, but close to it. That's about 1.25%. A year ago, they were trading a few bucks shy where they are right now, right around 31. And then they sold off in the nadir there of Christmas Eve down to, let's see, where were they? About almost a little bit shy of 21. So they sold off a pretty good clip. And then about 10 handles. And they rallied back up over the course of about a month, not even, 3 weeks into early Jan. They were trading about 29 again. So they got back up there pretty quick. Then they kind of been vacillating in about the 26 to low 30s range until recently where they kind of had another little bit of an upswing up to where they are right now, about 33.66 coming into showtime. What do we see out here? This seems like it's a recipe for some call love, and that does appear to be what we've got on the docket here going out. These are weeklies. These are AUG seconds. These are pretty close to home. Interesting. The AUG expiring on the 2nd, 10,000 of the AUG expiring on the 2nd. 35 calls going up for 45 cents. Not quite lifting the offer, so a little bit off the offer. These are 40 cents at 47. Getting 10,000 done at 45. Not a bad print there opening over there on the Philly. So this is one, Mr. Rock Lobster, seems like someone looking like they're looking for a little bit of a run here in just the next couple of weeks, next 10 days in Pulte, putting 45 cents to work 10,000 times to see just that. Looking at this chart, at least over the last year, their 52-week high is 34.03. So this guy's looking for a bit of a move to the upside, sir. This is aggressive. What say you about these very near-term, somewhat optimistic calls in Pulte Group?
What say me? Well, you got the Fed's going to come out whether they're going to do something with rates like the 30th and the 31st, and those are expiring August 2nd. So I should say August 2nd. But the builder group, home builders, interest rate sensitive. The algos love all the interest rate sensitive stuff. If they cut 50 basis points, which I'm still trying to figure out how they're going to word all that. They could just say, hey, it's just general uncertainty. But anyway, I think interest rate sensitive stuff might get a little pop, and that to me would be the recipe for that one right there.
That's an expensive roll of the dice if it doesn't go your way. I mean, that's not going to break a big fund.
Yes, it is.
But that's I don't know. I see what you're saying, and I probably agree with that's probably the sentiment behind it. I probably would think of other ways to probably do that, not just throwing away 45 cents 10,000 times, which could easily come to pass in that one. Quite so. We're going to put that one in the to be watched category. We're going to come back to this one, see if our friend threw away 45 cents, or maybe the Rock Lobster thinks it's savvy. Where do you fall on that, listeners? Let's let us know while we keep on rolling to our final name here. Get a bonus one today. We threw in the Russell for you. Let's go CLDR here, rounding out our three naughty bears we're highlighting here on the old Odd Block today. CLDR, ticker symbol CLDR. This is a U.S.-based software company that, surprise, surprise, operates in the cloud. And let's see. Today they're trading a whopping $5.86. And let's see. There we go. A year ago, this one's not looking good, listeners. A year ago they were trading nearly 3x that, nearly $15. And then they kind of shot up over the course of that year, up to about $20. Looks like they hit their high close to it around maybe, looks like Sep or October in that range. Can't see the exact date, but it's around that level. And then they pretty much have been on the dark side ever since, selling off again by the end of October to 13.25, by November to about 10, and then by the nadir day. Actually, the nadir wasn't the nadir for them. They stayed at 10. And they actually rallied a bit in March up to 15 again. And ever since then, in March, they've kind of just been looking pretty rough, including looks like they might have had earnings recently because they just fell off a cliff from about 9 down to 5 back on the 5th of June. So not exactly been a good banner time here for the cloud software player CLDR. Let's see what's going on out here. Got some call love going on. 9,000 of the SEP 7/2 going up for 20 cents. These calls are 15 cents at 20. This guy's taking them all down. 9,000 times there for 20 cents. He's like, how are they now? And let's see. These are SEP 7/2. The earnings are September 4th. So this is a straight-up upside earnings play here on CLDR. This thing needs to run a bit. Let's see. These are 7.5, so not quite $2, about $1.70 or so. This thing needs to move in order for these calls to make a living. So interesting. And that obviously, by the time earnings come out, most of that decay will already probably have come to pass. But still, you get that little earnings pump, so that might keep you alive a little bit longer. Maybe you get a little bit of a free swing at the bat. Not quite free, but low-cost swing at the bat until earnings, and you get out maybe before the event. Maybe you pull the old Rock Lobster. What say you, sir, Mr. Rock Lobster? What do you think of these 20 cents, nearly $2 out of the money on a $6 stock?
And they're buying September, right? I think this is a very it's a reasonable shot for a trade, don't you? I mean, if you're going to use option leverage and buy 20-cent options, I don't know if CLDR is getting buried by Amazon or not. It sounds like it could be in the Amazon, the list of bodies that Amazon is buried is a long one. But I could see that if you want the leverage. To me, it's a pretty decent leverage trade. You're getting a lot of bang for your buck for 20 cents. So with enough time, I think that you got a shot for that to work out.
On the surface, it seems like it wouldn't be a Rock Lobster play, but when I was looking at it, I thought, this might actually fall into your category because you like those. I know you like those little pre-earnings plays, and depending on when he closed it out, obviously. So you know what? We know what's going to happen to this one now. We have to know when he closes it out. So we have to come back to this one. So that's another to be watched today. A lot going on. Russell puts have to be watched. We're watching everything. We are the eyes of the market. Nothing escapes us here except for the endless scratching of the Rock Lobster as we keep on rolling right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it is time to arm you with a bit of strategery, maybe a lesson or two in how to approach various aspects of options trading. Trey, Rock Lobster and I have spent a lot of time talking about and finding and scanning for interesting options that might be worthy of at least analyzing, let alone trading. So this is an interesting topic, how to go about finding such things. And it sounds like the folks over Fidelity have that on the brain these days as well. Is that the case, sir?
It sure is. Yeah, I think many of us have fallen in that habit where we find ourselves trading just a couple of indices over and over again. And at some point you may run into a time where that particular index, isn't giving you the action that you're used to, right? Maybe you're not seeing vol the way it's been before, or maybe your risk tolerance have changed. So, wanted to spend a little bit of time just talking about some of the different scanners and screeners and some of the different ways we think about it. There's too many variations of a scan to really run through all at once. We could spend hours on the topic, but wanted to talk about just some of the benefits and drawbacks of some of the few types here, and maybe give you some things to, for everyone to think about when you're starting to build your scans here overall. So one of the things that, we often teach to on the strategy desk, right, if you're putting on an option trade, we believe you should have an outlook on price, time, and volatility. Well, why is this? Well, these are the three main components that make up an option premium here, and what's going to change our option premium. So when we start to think about what different scans and screeners are going to provide for us, well, they're usually going to give us some input back on one or multiple of these three things. The other thing we always want to consider, right, even though we've formulated our outlook on price, time, and volatility, there may be an option strategy that matches that perfectly, but we want to make sure that strategy also matches our risk tolerance as well, right? Not all of us want to have the risk of a naked call, or a naked put, and we need to manage that here appropriately. But jumping into the scans, one of the first ones I like to always spend a moment of time in is, that first bit of outlook on price. And this is an easier one, maybe from those of you that are just coming to options from, maybe trading stocks or ETFs. Maybe you have a good plan in place, for finding those types of investments. But as you go to options, maybe you steer away from it. Very important to understand price is always a big component of option pricing. And we can do a lot of our scans, right, based on the underlying price. So one of the things that I know we spend a lot of time that our strategy desk will bring up on the show are looking at charts. We have stock screeners and filters available that help us identify things like a trend. We can look for stocks that are trending up, increases in price. We can look for things like price crossing above or staying above our moving average. And the idea is finding stocks that are trading in a given trend, and we're trying to take advantage of that here as well. If we're using some of these technicals, we may want to add some additional components to our chart, looking at things like momentum, volume, or volatility to help us with that final confirmation. But it gives us a good starting place here, right, to build our option strategies off of. We do get quite a few people that, will call the trade off of fundamentals as well. This becomes a little bit harder to translate to options. Can't tell you how many times we've had the phone call of, hey, I think XYZ stock is really great. I bought an option that expires in an hour. I'm not sure why it's not going up. So we have to keep in mind, if we have a fundamental story, if we're basing our decisions off of the company's books, off of earnings reports, these trades tend to be longer term. If you're translating that to options, right, you can use those types of scans, but, make sure you're looking at a further dated option that's actually going to cover some of the time it needs to actually anticipate those price changes. And finally, ETFs become popular as well for those that maybe have a more macro outlook, right? Maybe you want to capture what's happening in a given sector or area of the market, right? A simple scan can find you some, particular ETF that's going to match that. And give us kind of the next steps here as well. Now, we'll also say when we are running some of these basic scans off of price, well, what are we really lacking? Well, understanding of some of the pieces of the actual option market for that underlying. So one of the things we're missing is a volatility assumption, right? So maybe we found that stock that meets our trend. Well, we want to go in. Let's see what's happening with implied volatility, right? Is it increasing, decreasing, or staying sideways here as well? We also need to check the liquidity of the option market, right? This is a kind of a drawback. You might find that the stock that's hitting the trend, you go look at the option market. Maybe it's not a penny pilot. Maybe the spreads are wide enough to drive a truck through. Maybe we don't have as much strikes and expirations here for it. So we need to be paying attention and doing some additional analysis, when we're doing this type of scan. So jumping over to the option market, right? We have a ton of different things we can scan there. I'd say some of the more common ones that come up, the odd block here, you look for a lot of, maybe those interesting volume things like, a higher volume compared to, prior volume, right, that might point out some interesting ideas out there, finding some different, high volume on a particular strike or expiration. It's not there. The other common ones are volatility assumption scans, right? So we have scans out there that'll run for increasing or decreasing volatility. You can look for things like IV versus HV. For those of you that are option sellers by nature, right, we see a lot of that, interest in that high volatility, right? Want to sell that juice here as well, bring in that premium, which is not a bad way to go about it. But what I'd like to say with those scans, take a little bit of extra time with those too. Make sure you understand where vol is going, right? Are you at a point where you think it's peaked and started to come back down? Or can that still keep increasing, right? Do we have earnings announcement coming up, dividend announcements that are coming up here as well? Or add some of those chart components here as well, right? Just because you have that high implied volatility, we don't necessarily need to fight the trend. You can pick which side of the market that you'd like to go on here as well. Like I said, there's no really right or wrong scan out there, but we have so much data out there. You have to understand every scan is maybe building off one or two components. Take a couple extra steps. Understand whether other pieces of the puzzle are missing from that price, time, and volatility. Spend some extra research on there as well, and let that build the right strategy out there. Of course, there's so many of these scans out here. We have a ton at Fidelity that are already pre-built for you, based on even strategies that you're interested in. So take advantage of the tools that are out there, but take some steps too to complete the analysis. So that was just a couple of thoughts I had. I think it's always an interesting area. So many different ways to find ideas out there, but a few of the things that I like to take a look at when going through scans.
Uncle Mike, this is obviously an interesting area. We could probably spend many hours on it, but you like to utilize maybe some different approaches when you're determining your underlying for how to go about trading. I know you have your stalwarts, your SPYs, your SLVs, your Apples, but when you go beyond that, maybe some clients are coming to you saying, "Hey, I need to find some good options to or underlying, I should say, to trade options on." How do you usually advise them? How do you usually go about that?
Well, I think the most important thing that I'd like to emphasize, especially when scanning for would be if volatility is high, it's high for a reason. You're looking for being a premium seller, and oftentimes we always talk about the dark side of premium selling. This is what lures people to the dark side. Wow, I can sell a covered call and get a 12% rate of return for just 1 month, and the stock doesn't even have to move. How can I lose? Well, if volatility is that high, there's probably reasons it is that high. Now, it could be good, it could be bad, but just have an understanding of what the reason that volatility is that high before you get into it. It might be still beneficial for you to do, it might not be, but just understand why that reason is as such. The other thing that I would recommend when you're doing a scan, if all of a sudden you see something to where you have a mispriced option to where the calls the puts are way more than the calls or something like that, there's a reason for it typically. Now, occasionally you can get into some type of a conversion or a box spread and get a guaranteed rate of return. Just to give you an idea of it, in the 15 or so years that I've been trading options, I think it's happened to me maybe like 2 or 3 times that I happen to just catch something like, oh, wow, let's do this. So it's not going to happen that often, but what you need to be aware of is when you do see something like that why is that the case? Is there a dividend coming up? Is there something along the lines to where there's going to be a stock split? If it looks too good to be true, sometimes scanners can pull things up like that. And I love scanners. I think they're a wonderful thing. But just when you see things that look too good to be true, especially when doing option scans, look into why it is that way before taking any action. And that's the thing that I would have to add to Trey's wonderful segment.
Always one to grow on from Uncle Mike. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to the portion of the show where we tell you what we're keeping an eye on, and it is a hot and heavy week. FANG stocks reporting this week, so look out above and indeed below. Let's kick things off. Big names reporting today. We got TD Ameritrade after the bell. Whirlpool, Logitech for all your peripherals. Tomorrow we got Snap and the former stealth Apple, not too stealthy anymore, Chipotle. I got JetBlue and Visa popping off tomorrow. Discover as well. Wednesday, a lot of people have been watching of late. Our neighbors across the street, they're Boeing before the bell, AT&T before the bell, Caterpillar there as well. After the bell on Wednesday, you got Facebook, you got Tesla, PayPal. Pick a name, you got them popping off. Then Thursday, you got some more. You got Nokia before the bell and 3M. Raytheon and Southwest after the bell. You got good old Amazon, a nice $2,000 name. Alphabet, Intel. So a lot of FANG names popping off. That's not enough. Friday, you got Twitter and Mickey D's. And Goodyear, if you're into the tire category. So a lot of big names popping off. A lot to keep an eye on. Again, the earnings move reports all up, all available for free for you over there at theoptionsinsider.com. Get on over there, check out what the straddles are pricing, what the real dollars are telling you in the marketplace, as well as what they priced in the past. You have to arm yourself with that data if you're going to be trading or analyzing these names during this time of year, especially. All right, let's go back around the horn the way we came. Let's start with Uncle Mike, sir. What is on your radar for the rest of this week?
Well, quite a bit. I mean, this is unique in that we have macro along with earnings coming out, and a lot of things could go either way. With FANG names reporting, with the Fed looking to do something with rates, with I'm going to be curious to see in the Fed statement why we lowered rates. Somewhere in parentheses, you could say because the president called me and said he'd beat me up if I didn't, or why'd you lower rates? I think that's probably one of the real reasons with why he's going to do it, but. No, I think that we have a lot going on, and we're below the 3,000 mark in the SPX, so going to see if we can make a run to push through that and see where this goes.
See where it goes, indeed. Trey, what are you watching to see where it goes this week, sir?
Yeah, earnings, and more earnings, so always a fun time for us here. A lot coming up. So a couple you mentioned that I'm going to have my eye on here tomorrow. Chipotle, one that we usually get a few phone calls on here from time to time. But it had a real strong uptrend here recently. Trading right now at 747, very close to those all-time highs. Really had to claw its way to get back there, back from 2015, but approaching that level, which I thought was interesting. And option market looking for a little over a $46, expected move based on that at the money straddle here for this week. So be very curious, if this report is enough to take it to those all-time highs or if it stalls out here. Be keeping an eye on that one tomorrow. And the other one tomorrow, too, that I was interested in here, too, was Snap here as well. So the at the money straddle price, just a little over $2 here right now. Today's option volume I thought was fairly interesting so far, about just under a 4-to-1 call to put ratio right now, with a ton of volume on that call seller, 69,000 call sellers to 35,000 call buyers. So I thought that was kind of interesting action from the option market here on that one. And this is one that's had a big move since the end of the year, right? It's trading right around that $5 mark up here to about $15.78 here. Recently started to come back down here and trading at $14.14 right now. So be keeping an eye on that one here tomorrow as well.
And last but not least, Mr. Rock Lobster, sir, what is lighting up your tape for the rest of this week?
Well, it's earnings, right? Earnings this week, FOMC next week. So far, tech, if Microsoft is any indication, tech is looking, pretty good all of a sudden. The trade war is not, I think it's probably hurting farmers, but at the same time, I think they're, the government's been doling out the money. So it feels like everybody's kind of expecting the worst. So it will not surprise me if we see some kind of crazy upside next week. So, because earnings don't look so bad. The banks came in pretty good. So, usually good bank earnings means somebody somewhere is making money.
Not Deutsche Bank, but everybody else maybe in the financial
Everybody
space.
but Deutsche Bank.
They can't figure out how to make money in those there banking waters. Unfortunately, listeners, that music means we've come to the end of another epic sojourn through the world of options. But before we go, let's go back around the horn, see what everyone's got cooking up that may interest you. Let's go back just the way we came. Let's start with the Rock Lobster. Sir, if folks are intrigued, they want to learn more, they want to check out a webinar, maybe an in-person mentoring or virtual mentoring, maybe they want to go into a pitch chat, maybe they want to come to Chicago for an epic event, where should they go? What should they do, sir?
Go to optionpit.com, click our mentoring page. And if you want to sign up for my vol newsletter, we'll give you a month trial for free if you heard it here on the Option Insider Radio Network. So we always got room for a few more people. So come and give it a ride and tell me what you think.
Click on the little boy sitting in the corner icon with a dunce cap on that says "Mentor Me." Click on that image on the Option Fit website. And if you don't have it, you should add it forthwith, sir. Because your marketing is always spot on. That would be pretty funny, at the very least. All right. And a man who never has a dunce cap, and he never makes you wear one. He's just that nice of a guy. Uncle Mike, sir, if folks want to reach out to you, maybe they want to sit by the Fox River with you and talk some options while sipping some delicious Skippy's lemonade. Where should they go? What should they do?
StCharlesWealth.com. If you sign up and become a client of mine, if you're looking for someone to be a wealth manager who's not afraid of the option product, feel free to contact me. My information's on my website. And with that in mind, if you do become a client, I will throw in a $100 Option Pit gift card.
The synergies, listeners, they are endless. And they're like today, it's unheralded, but have a guy like Uncle Mike, having him sitting by the river watching your portfolio so you can go do something else, that's a lesser heralded but just as important value of a financial advisor. Check them out, stcharleswealth.com. And last but not least, holding down the hot seat admirably yet again, Mr. Last Dad of the Last Son of Krypton. You just kind of broke down a lot of the cool scans you can do for options over there at Fidelity. If folks want to kick the tires for themselves and maybe try out those scans for themselves, Trey, where should they go? What should they do?
Absolutely, yeah. Check out fidelity.com/options. Learn a little bit more about our option platform here and some of those great scans that we have available for you. You can always give us a call, 877-907-4429. Feel free to ask for me or the Trading Strategy Desk. We'd love to talk to you further about your option strategies or tell you about some of the upcoming classes that our team offers here to help you progress in your option trading.
Check it out, fidelity.com/options. They make it really easy to find. So you have only yourself to blame if you don't head over there. Fidelity.com/options is the place to go to kick the tires and light the fires. Now, if you're saying to yourself, I need some more. I need some more analysis, some more volatility, all that fun stuff. Well, then we'll be back live in about an hour with some in-studio guests talking all the volatility in the world of crypto. Spoiler alert, there's a lot of it. Options, term structure, all that good stuff. Stay tuned for that. Otherwise, if you're listening after the fact on the podcast, you got a bunch of shows to choose from. Make sure if you haven't done so already, make sure you subscribe to the network. That's how you get everything. We'll keep you busy. I guarantee you that. And we'll see you back here in about an hour for crypto trading. Otherwise, crypto rundown. Otherwise, we'll see you back here on Thursday for this program, The Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.